Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Fourth quarter earnings season picking up speed this week, and we tried to get a little better read on what to look forward to with our research director Shiraz Mian, stock strategist Todd Bunton, and ETF strategist Eric Dutram. And Shiraz, I'm going to start with you. You say the word this earnings season, guidance.
That's right. The expectations for the quarter have come down so much that relative to those expectations, the results will most likely be better. So surprises, growth rates, the level of medium surprise, those would most likely be better than what we saw in the third quarter. But there will be no reason to start rejoicing about the earnings strength coming back into the market. The key will be how these management teams guide towards the coming quarters, because even as the fourth quarter expectations were coming down, we did not really see that much downward adjustment to expectations for the entire year for 2013. So those expectations still remain quite high. Close to 10% earnings growth is expected in 2013, and that reflects quite a few optimistic assumptions on the top line as well as on the margin side. And so the key will be, do management teams also see that kind of optimistic backdrop for the year, or it's just the analysts?
Okay, so company commentary is what you're going to be
Absolutely.
looking for.
That's right.
As any caution flags may emerge from there. As far as the market taking its cue totally from earnings season, Eric, you say yes, that's what it's going to do.
Definitely. We got the debt ceiling fight coming up, but that's, I think, going to happen in about a month from now. And so really with that, and then China and Europe kind of just muddling through right now, investors really have nothing else but earnings. So that's really going to be the big play for the next couple weeks.
Any caution flags for you out there?
Definitely. I'm really concerned about the consumer right now, thanks to the new payroll tax that just came in. So I'm wondering if some of the companies are going to be lowering their guidance for that. And then I'm also looking at financials. They were one of the best performing sectors in the latter part of 2012.
That's right.
And I'm wondering, we saw that they've been reducing their estimates a little bit. So, can they keep leading the market? It's going to be a big question.
That's right.
As far as what is going to be driving earnings growth this time around, Todd, you say nothing.
Nothing at all, yeah. And if you look, last quarter was the worst quarter for earnings since the end of the Great Recession. Even though, revenue growth hasn't been that terrible, why was earnings growth slightly negative last quarter? Why is it going to be flat this quarter? And that's because margins have peaked. So where is earnings growth going to come from? Maybe some emerging markets. China's starting to reflate a little bit. But overall, I expect earnings growth to be flat to maybe in the low single digits for this year. And as Shiraz talked about, based on consensus estimates, analysts are looking for double-digit earnings per share growth this year. So guidance is the key this year, but I think management guidance is going to be tepid, and that's going to lower analysts' expectations quite a bit, probably lower stock prices too.
Yeah.
So does that mean that earnings results are not going to be supportive to the bull market case?
That's right. That's that's my thesis that I've been talking about for a while. There were a number of macro questions that kind of eased up anxieties about the market and pushed stocks higher. And the expectation has been that these estimates for 2013, they reflect actual ground realities. So if we do get negative guidance for 2013, as all of us are talking about, that is not favorable to the bull run that we have been seeing. And just to build on the comment that Eric made, the financial sector has been a very strong performer on the earnings front for the last many quarters. In fact, the only standout sector last earnings season in the third quarter was finance. Outside of finance, the earnings for the rest of the S&P were negative. Following last week's major foreclosure-related settlement, the estimates for the finance sector have really come down. So now in the Q4 season, growth for finance is close to 2%, 2.5% earnings growth in Q4. So overall, a fairly grim earnings growth picture.
So we get bank earnings this week.
That's right.
Is it all about the banks?
This week,
Well, just earnings, are the banks going to be a key standout player this time around?
Well, I think you really got to look at Apple coming up in next week or
That's
the week
right.
after.
That's right.
Based on what they reported earlier about reducing the number of shipments and whatnot, and obviously they make up such a huge portion of the Nasdaq and just the broader earnings picture that once again I'm sure we're going to be talking about Apple in another week or so.
yeah,
Okay.
financials are the key this week, but then the
But not for the
attention
whole
shifts.
season.
Just
That's
early
right.
reports.
Yeah,
Okay.
the attention shifts the following week to all of these major tech companies from Apple, Google, Yahoo. But all these companies will be reporting, and the outlook that they will give us will drive how tech is the largest sector in the S&P 500. Finance is the close second. So this week is mostly banks, and then the days ahead, tech and all the others.
Okay, thanks for that. And they'll be keeping their eye on what's going on during this earnings season to bring you any updates. In the meantime, don't forget we have our top pick segment just a click away.